Hello, Internet. Welcome to my channel. I'm Philip. I got trading the S&P 500 here with the SPX index. We had two successful trades this morning. It's market open. It's already 8:30. I'm in Arizona, so it's 10:30 Eastern Standard Time. We've had two trades this morning. Right now, positive 309 and positive 497. We had one long and one short. So to be a good trader, you got to be flexible. We were just putting in another order here. We did a stop sell at a price of 26.72. Okay, got to put that in there. And 2% risk is going to be 28 units. We got a stop loss. This is the way we do it. We look at these things that come up on our TradingView window chart. Okay, and we're going to move these like pieces on a board. Okay, so we're watching. We have one buy here. If it trades above this level, we're going to go long. And if it trades below this level, we're going to go short. We've already made profit here from here up this morning and from here down. So here we are at this point. Market opened right here. So we had up and then down. We're profitable on both sides. And you might think that's difficult. How can we do this? There are no indicators. We're not looking at anything but price. Price has all the information we need. We need to know if it's going up or going down. That's all we need. And time and time again, indicators have shown that, price is going to do what it does, up or down, regardless of what any indicator says. Indicators have a probability of being, it's a probability factor. It doesn't mean the thing's going to happen the way that it does. I found that these indicators are not reliable. So I just double click on the TradingView chart, and then you get the price to take up the whole screen. And this is all you really need. Like, we can move this buy stop down to here if we wanted to, right? We could then take this sell stop and place it down here below this, like down here, right? Like at 2673, right? Was that 2673? 2673.0. We want still only 2% risk on it. Oh, I'm sorry, 2. So let's modify that order. Okay, so here we're gonna buy long. We just moved this down. I don't know if you noticed, but we just moved down from here to here. It gave us a better entry, right? Price has gone down, and if it continues to go back up, it gives us a better entry. We don't have to go long from here. We can get long from here, and all this from here to there now can be profit, because we're adapting with the market condition. So this is a dynamic that we're always flexing. We're always we're adapting with the market. Market's going to move maybe up or down. We're not sure, but we're ready to go wherever this thing goes. So the idea now is to sit and wait for the market. So this is the way that made me successful. I just took these indicators off the chart and I watched price. We don't ever make the move on the current candle. We have a 5-minute increment. So the action steps happen in 5-minute increments on this 5-minute chart. We're prepared. We're always prepared by putting in these stop orders, the buy stop and sell stop. I never use a limit order because we don't want to predict what the market is doing, and to use so we just entered here. Now the first thing we want to do is take our stop loss as quick as we can and move and reduce risk. So there we were at 2% initially, right? And now we just moved our stop down, so we only have $139 instead of $200 or 2%, which was like what, $220 on the trade. We only have $139 on the trade. So when market moves with us, our idea is to make it a riskless trade as quick as possible. So we want to move this stop off in increments till it gets to the zero risk. So it'll be $0, and then move it continually to move it so that we lock in profit, right? Like at this point, being $101, we'll move it to break even. There's a 29-cent loss, right? The most we can lose on this trade at this point in time now is 29 cents, right? If it continues to fall, we'll move our stop loss to lock in profit. right? What we do is we're not trying to predict the market, and I realized using a limit, like if we used the limit price down here and said, well, you know, price is going to come all the way, let's say, down to here, right? And then bounce back. We would put a limit order in right here, right? You put a limit order in, and you say, well, when price gets down to this level, we'll buy. That's predicting the market. Price is going to come down here. It's going to have all that momentum coming down, and then like you're going to pick at what point it's going to stop and then turn around. That never happens. You might have 10 trades, 1 be profitable, 10 be losers. So limit orders don't work for me. What I found to work is to go with the flow. Go with the flow. Be flexible. We can go long. We can go short. And you might in the same day you might go 10 times long, 10 times short. Or 5 and 5 or 2 or 2, whatever your trading limits are. But I found this to be profitable, to use buy stops and buy sells, and you say, yeah, market will go past you. What I found with buy stops and buy sells is that when we get into profit, it goes into profit quickly. Because of the breakout, there's a lot of orders on the when you get to a buy or sell level. And if it goes through it, generally it plows through it. Now this might stop, it might turn around. We're prepared, We can take a couple losses, it doesn't matter. Right now we only have 29 cents on the table. So if this turns around and comes back, oh well, whatever. We could have had a possible $100 profit, $120 profit or whatever. But that's not, significant enough to make any difference. So this market is coming back a little bit. It's taking some money off the table that it gave us, which is okay. What it did, that first move down, was allowed us to take our risk off the table. We're in now for a free trade. Like if this continues down further, fantastic. We have no risk and all potential to make as this goes down, right? It could just as easily right now, it's at $17 away, $26 away from our cutoff here. We can be taken out here in just a second with a 29-cent loss. Okay, and that's okay. We can take 10 of these trades a day with zero risk. You know what I'm. Now it goes to the next bar. 5 minutes opens, and it's going to continue down. What we do with our stop loss, same thing. As we like to bring it in to lock in profit. So at this case, at this section, it's at negative. The max risk is negative 17%, 0.17, which is negative $19. Well, a loss of negative is a profit. So we locked in $19 on this trade, and if it continues down, we'll continue to move this stop loss down behind it and maximize our gain with this trade. So as market continues, we'll keep updating. The market did just take us out at that moment. So we're looking at our stuff here. You can see we locked in a positive just under $7 profit. It could have been just as easy as $7 loss. It doesn't matter. We get trades like that throughout the day. They might be plus 10, minus 20, plus 15, minus 7, plus 5, minus 3. Because our philosophy, my philosophy, in fact, is to take reduce risk. As soon as I can get my 2% off the table, if the market allows me, as soon as possible. If I get a plus 100 in the trade or whatever, I immediately, because that happens quite frequently with our when we do buy and sell stop orders, that we get into profit quite immediately. So as soon as I can, as the market will allow me, I take the risk off the. So I put 2% when I make my trade, right? We'll do a stop. We put a stop loss order, and the difference between the stop loss and your market price is the number of units will dictate the percentage that you want to trade. So if you want to do 2%, given this stop loss, the difference between that risk is going to be 23 shares, is going to equal 2% of our account equity, right? 222. 2% is on the table at this point, right? Well, when we make that trade. So if it gets in and we go live, if it takes our order and goes live, our job is to move this stop loss up to break even as fast as possible. If as soon as the trade goes positive, we remove it up to 1%, to 0.5%, to 1/4%, to 0% risk. At that point, if it continues up or positive, we're going to move that stop loss up, lock in profit, reduce risk, reduce risk, reduce risk, reduce risk. The name of the game in trading is reduce risk. It's to reduce risk. There's no other concept in trading as powerful as the idea is to reduce risk. As soon as you get into a trade, you're going to have a risk number. There's going to be some type, and that is if you're using a stop loss. Because if you don't use a stop loss, you can be at risk for more than what's in your account, right? With a margin call and so forth. So we always use a stop loss order. This is key to trading. We have defined risk for each trade, and immediately when the market allows us to, we take off risk. Okay, we're not waiting around to see what the market's going to do, to make the market see if it's going to continue down or to continue up. We don't know. If the market gives us plus 50, plus 100, and immediately we're reducing risk. Okay, so we can lock in these sets of positive and negatives. Small positives, small negatives will be a washout until that breakout that happens that we can bank on. Right? So we're trying. The idea here by reducing risk, the principle of reducing risk is to keep losses small. Keep losses. You might have the counter idea though that is going to happen when you reduce risk is you're necessarily going to have some small wins. You might have some small losses. That's what we're going for, small losses. But inevitably, we're going to create some small wins because of that too, and that's okay. Small wins, small losses. That's okay until the breakout happens that just plows through our buy or sell. And then just like this one, for instance, I got in right here at 26.98 when it just in this last leg right there and got us in, and then the next day opened up right here. We went south for some more profit. Those are the days that you wake up have an extra $1,500 in your account overnight, and and this happens throughout the week, like once a week. So you get a bonus from the market if you're on the right side. Which is good. I have found that this last candlestick bar has a directional indicator. I have found, and this is a probabilistic nature, is that this last bar of the last day, trading day, if it has a tail, it generally points in the direction that the market's going to open. If it has a tail, so the tail is pointing down. You can see, and if you put an arrow at the end of that tail, you would have a little arrow direction pointing down. That generally, not always, but generally tells us where the market's going to gap open. So you can see that last bar there pointing down. If we add an arrow to the bottom of that tail, it would point down. So we went south, and sure enough, we got paid off really well for that, and then caught the rebound back up. So right here we're down. This is going to be a fractal formation right here on this purple bar. If this, let me say, when this candle closes above the low of this purple bar, that'll be a fractal. And if that is a fractal, then we can make our next sell stop right here. So that's where we stand. Let's let the market test if we're going to go back up at this point, or much lower. I'll go ahead and put a sell stop one more time in. We're going to put a stop loss order down here below this low. 2668. 2668.0. So I'm going to move that sell stop up here like this. We want to keep the trade to have 2% of our account. So we got one sell stop low. This will be a fractal. Okay, it will be because it's the lowest point. And in 2 minutes and 11 seconds. If this can stay above this low, that'll be a fractal, and we're in the right spot for a breakout below this point if it goes lower. So we're ready for a breakout above here, we're ready for a breakout below here, and again we just wait, let the market talk to us. So market so far has come up, almost got in with our go long order here, but didn't quite get to the price. On this current bar now, it's dropping back down. See, that's a good thing. You know, prices 4 out of 5 days out of the market are going to move sideways. About 75 to 80% of the time they're going to move sideways. Markets can go up, they can go down, but 4 out of 5 days the market tends to go sideways. You know, it chops up and down, but generally goes sideways. And there'll be a range. The width of this range right here between this buy stop and sell stop, I want to be within the range, such that if it goes above this, it goes higher, and if it goes below this, it goes lower. Sometimes, however, you're not going to be able to know where that range is going to be, and you might get like you might have put this buy order in here, and you might have got long, at which case you might have been, you know, plus or minus 5 or 10 or negative 20 or whatever. You might get stopped out. I've learned to keep these a little wider, you know, between the buy stop and the sell stop, so that we can allow for price fluctuation, because it'll move around, of course. And the reason, the best. Okay, so far so good. This is what's going on in the market right now. It's dropping down. We want to see it come down, maybe close down here, and then open up again, and then continue down. We might have a second push down to this bottom level, or somewhere into this area, 2640 area, maybe. We'll see. So that's where we stand so far. Continue to wait. So we got live down here at the sell stop. This last current bar touched our price. It broke the fractal down here, the low of this candle right there, to make a new low. So we're in right here long. The idea of the game is to reduce risk, reduce risk, reduce risk. So we have, this is the 23 right here. So we want to give it enough leeway so that if it comes back a little bit, I'm not sure which direction, we don't want to get stopped out. So remember I said generally when we have a breakthrough, it generally pushes right past it. Of course, except when the days that it doesn't. But we're right at a fractal level, so usually it does something right around these breakout levels. We're looking for the this trade with 23 shares. The SPX has about 2% of our account, 1.97, which is $222 on the table for the trade. We want to remove that as quick as possible, but that's the risk that we're willing for this trade. So we can't lose more than 2% of our account. This might have been the one that comes down to touch the bottom and then trades within the range again. Sometimes it doesn't go past it. You can see this bar where we got in was not right on the other side of that low. We gave it a few points difference. So it comes down to get us. Generally that's why when it just blows through, but it didn't this time, so we're gonna wait patiently. So we did get the market move that we were expecting past this fractal. So what's our principle here? Reduce risk, reduce risk, reduce risk. So we're gonna go to the high of that candle, right about there. Hit enter. We'll lock in. We'll let's see what this is. We click on that. We have risk of $74 on the table. Okay. We could, if we wanted to, lock in some profit here. So we moved our stop loss down to the low of that. So it has a locked in profit of $129 for this trade. We want to see it go lower, of course, and we'll be happy to adjust our stop down. So we're right there at the bottom. We're about to get stopped out. There it is. So we added another profit, $144 to the account. and we can get low again for another sell stop at that entry that we got out at. So we want to be in at this price, 61. I'll say 62, okay. And then 2%, yeah, so we can set up another sell that, because it's going lower, we expect it to continue to go lower. We just like to take the profit and reduce risk as fast and as much as we can. So in this case, we entered the trade with $200 or 2% of our risk on the table. So now we just have a $50 risk on the table. The key idea of trading is to reduce risk as fast as possible. So we're in the trade. We got $50 profit. I could probably get this off the table here to see if it comes down. Here I locked in a risk, reduce risk. So we have only $21 of risk on the table for this trade. Yeah, we got stopped out, so we lost $21. There it is, 22.5. But you know, that's the way it goes. 26.59 is another sell stop. So we put another sell stop to be prepared if the market is going to tank, you know, south again. We want to be prepared for on this current candle. The low is 26.59, so we'll be at 26.58. 26.58.0. Tab over. Okay, use the stop loss 2%. Sounds good. Let's get in there. Okay, so if it breaks below this, we're gonna hit the smaller that you can get the window between your sell stop and stop order, or buy stop and stop order. The smaller that you can get this, the more shares that you can acquire, the more bang for your buck on the move that you're going to get. So the idea is to get as small range as possible. The payoff, however, is of course that range is very narrow, and you might get some whipsaw going on. You know, you might get sold into it and then chopped out and then bought back into it. So that's where we stand right now so far. So we're back in, checking this out. We made 144 profit, and then followed by a 22 loss. So we got $122 on that trade. We are pegged at the low, and we're pegged at the next fractal high. So we can be prepared if it breaks above this fractal to go higher. We're prepared if it breaks this low to go lower. Continue to wait. Okay, we just got short again. It touched our entry for the sell stop. Idea is to reduce risk. We have on this trade, we have $248 on the table. We want to get that reduced risk as much as possible. So we continually move this down, and when we can get to a break-even trade, maybe a small profit, get it locked in. There it is. So we're already up $118. We have zero risk in the trade. Locked in, $18 profit. If this can jump down again, we'll go ahead and move that stop loss order in and then lock in some more profit. So at this point, we are waiting for the market. We move this stop down a little bit, a little further. It seems to be making some new lows, which is giving us more profit. So I got locked in now, 167 of profit locked in. We'll continue to move this stop down as price moves down. We're gonna get stopped out. We got stopped out right here. So there's a lock in of $162 profit. We're up to 11.6 in our account. Of course, the idea of getting stopped out is that when we go to put another stop in, price is already below us. Where's our stop loss? We don't have a stop loss here, so we'll put one in, 25 points away. What do we have for stop? We have $13 of risk on this trade on the table. So if it continues to go low, we're gonna get stopped out for a small loss on this one. Yep. So another loss of $22. It's okay to get losses. It doesn't matter. As long as they're 20 bucks and you get profits of 160, you know, you can see which direction our account's going here. So just to put another sell stop in. I think I got a sell market last time. That's why it will go 53. Okay. And then we'll add a stop loss in there, 2%. Okay. So here's our order. There's our stop loss. We're going to see on this trade where we have if this trade gets, we have 2%, which is $230 on the table. So brilliant. We get live. We get took into the market. Our objective is to reduce risk as fast as possible. So I just zoom in here a little bit on my chart. When it goes positive, I want to reduce risk. Okay, not when it's negative. So we don't know how much farther this is going to push down. Markets can always go farther in the direction than most people have liquidity for. So the saying is the market can be, you know, it can last longer irrational than you can remain solvent. So go with the flow. We put a defined risk on each trade. If it goes with our trade, we are continually reducing risk. If it goes against our trade, we just sit and wait. It may turn around and we may take the full loss on the trade. But you'll notice from my trading, I very rarely take the full loss because I'm reducing risk. We've got positive, you know, there was a negative 200 there. That was yesterday's. You know, negative 107. So we do get stopped out with some $100, $200 losses, but for the most part, we try to keep those as small as possible. And the principle there is reduce risk, reduce risk, reduce risk as fast as possible. So we've had now $200 over 2% on the table now, 244 2% on the table now for some time. As this candle has 3 more minutes left to go to close this candle. We don't know what the market's going to do for us, so we're waiting. So we took the full loss on this last trade. As you can see, we were short right here, and we put the loss up here, and that did come up and get our loss for a total of $245, which was 2% on that trade. So we're at 11,390 current account equity. You can see. And this just might be a pause, just like this one did before the trend continues. I also did move my buy stop from this fractal down to this right there, because if it does turn around, we have more. It has given us more opportunity. Remember, trading is a dynamic thing. So it's for me, I've always been not profitable. If it was just to, you know, put in an order and let it do its thing. I became profitable when I started realizing that I have to take action on top of my account in order to remain profitable. Okay, and I want 2% on each trade. So I'll take this off because I moved my... So here's our range, okay? Now you'll see that there's difference. Both of these represent 2%. This is 28 shares. It represents 1.97%. This is 43 shares, and it represents 2.03%. Again, the difference between the number of shares is the difference between the entry point and our stop loss. That difference dictates if we hold to be a constant 2% per trade, then the difference between the entry and the stop will dictate how many shares to trade to make a 2% per trade number. Okay, so I move this down so we can get more opportunity if it goes up. It may not, you know, it may do this up thing and then continue down. You know, we don't know. It may turn around and rebound back up. Again, we don't know. But with the principle of reduce risk as fast as possible, if we're in a trade, again, very rarely do we hit maximum loss. This was one that we did hit, because they do happen. But the idea of reducing risk as fast as possible is to get us in, is to eliminate that risk. So if at worst we have 2% on the table per trade, that's our worst, 2%. We can only risk less than that as the trade gets better. Okay. So we'll wait here, give the market some time. So the market currently is making its way back up to our buy stop level, just about there. It didn't trigger the order yet, but it's at the top end of our range there. Perhaps making a breakout back up to this level, and then hopefully back up to this level. Let's see. We're prepared either way. Most we can lose on either trade is 2% of our account. At worst, our principle of reduce risk as fast as possible allows us to take that risk off the table as soon as we can, given market conditions. So it looks like we may have a turnaround for a right here. We got this fractal bottom right here, and this one looks like maybe it came down to where it needed to be. Perhaps we'll trend forward up from this point forward. Okay, we got triggered long, so our idea is to remove risk as fast as possible. So we need to take this stop loss for 43 that we have. What's our risk on the table? 2%, which is $233 of our account. And when we get to 50 or $100 profit, we want to move this risk off the table. So we just got to another bar that closed at the top of its range, the last one. Yeah, sometimes it comes up there like that, grabs our entry, and then comes right back down to the stop loss. Such is the way of trading. We can never know for certain on any trade. That's why we have devised our rules the way we do. There's $50 profit, so I'm taking this stop loss and moving it up. No, not that one. This one. I want to move to the low of that bar. So given this trade right now, I only have $44 on the table. Reduce risk as fast as possible is the name of the game. Reduce risk. Come on, market. We don't care if it goes up or down. We have our risk reduced. We have 0.339% on the table. We're now into positive $100 territory. I can remove the rest of that risk off the table. No. I need to move this risk off the table. I didn't move the... See, I got two of these darn things here. That stop loss wants to be down here. And this, yeah. So enter that. And then this one, I want to go to break even. It has an $8 profit locked in. So the worst that can happen now is an $8 profit on this trade. You can see there. I reduced risk up to the point where we now have a positive $8 gain on this trade no matter what the market does. So we got our risk off the table. If the market continues up, we'll lock in profit by moving our stop loss up. If it moves down, we'll be stopped out with a small, negligible amount of profit, $9 or $8, whatever it was. So that's how you trade. Okay, reduce risk. We have no risk on this trade. We're risk-free trading. I mean, how bad can that be, right? We might come down and get stopped out right now, and it may take off afterwards, right? But we would go in again with another buy, stop at the high of this current bar, 26.66, 26.67, right? So it's trading's a dynamic thing. As it gets your order, you move your stop. As it takes your order out, closes your position, you reopen new positions. You're constantly opening positions, adjusting stops, opening positions, adjusting stops. That's what we do. So we might get stopped out here, but we're prepared. If the market moves up, we're prepared. If the market moves down, we're prepared. Right? We're prepared for each way the market goes. So we'll just wait and see what the market tells us. Okay, so I got stopped out with a minimum profit, $8, which means we're going to go ahead and open up our new buy stop order at the high of this candle right there, the high right there. So that's 26.65. So 26.66 will do. Add a stop loss order in there, make it 2% if we can. I don't take profit because I moved my stop loss order. So let's put that up there. And there's our stop loss and so forth to give us a 28 share, 2% on that trade. Market comes back down. We're selling the short at this fractal down here. We're going to go long at that new part right there. So that will be a fractal high if this closed below it, excuse me, and another close below this high, which will be in about 8.5 minutes. We'll see. We got a new range right here. We're waiting for the market to talk to us. It looks like this is going to be a local high. If this closes down here, the market currently is dropping back down. So you can see how we could have had the max loss on that last trade. We had $230 or 2%, right, on the table for this trade, and we quickly reduced risk, right, to the point where we had a positive $8 gain, the worst we could do. The market turned around, and then of course we got jumped out, and then it come down. We got another minute and a half on this 5-minute bar. It could close down here if it's low, and then you could see market possibly breaking this fractal right here and continuing lower and continuing lower. So that would be a good time to get low. So we'll see. That will make this a fractal high. And we could have lost, $230 or $220 right here, but our principle of going with the market and reducing risk as fast as possible allowed us to get with an $8 profit. Just kind of interesting. So we're watching this currently. We got this an action bar happening right now. An action bar, as you know, are these long open bars, possibly purple ones as well. Are action bars. Little non-action bars are indecision bars. Little bars. We don't know which is going to happen. There's an action bar, action bar, action bar. So this definitely is an action bar. It's 18 seconds left on this 5-minute bar, and it might close down here at its low end. We can see the next bar opening and going lower. So it looks like this is going to be the drop. It's going to push us past this fractal and get us on the next downward push. When you get an action bar like this, it closes at its low and goes to the next bar. We like to see the continue of that previous bar. So that's purple. It's down. We like to see downward continue. Looking at our indicators, we can see that we had just crossed positive, right? And this was low momentum down here, turning positive. We might have thought that this was time to go long. That's how these indicators can get us into trouble, because we would have been looking for a reason to go long here instead of just watching price, because price can go up and go down and go sideways, and there's nothing based on this previous history that will tell us what this price is going to do next. So that's why I decided to stop using those indicators on my trading, and sure enough, I've been profitable since then. Took from 7,500 up to 11 in 11.3 in 1.5 days so far. We're not through at today's profit or loss, so we'll see what we can get to by the end of today. Continue to wait it looks like this we're getting close to our entry here. So if we can get in there, we'll reduce risk as fast as we can. That's the name of the game. So we'll see. Continue to wait, continue to watch. Okay, the market has got to our entry price and then backed off a little bit. So we got short the market. We're short, we're live. We have a real profit and loss. We have, at worst, we can lose $171 on this trade, which would be 1.5%. Our idea is to reduce risk as fast as possible, as soon as we get $50 to $100 profit. Is the name of the game. So we watch, we wait patiently, and we let market talk to us. So I found by using these buy stop and buy sell orders that we really listen to the market. We're really listening. When you use limit orders, you're not listening to the market as much as you are talking to the market. You are saying, when you use a limit order, you're saying, I want the market to come down here and then turn around and go up if I put a limit order to buy right here. Okay. The difference between limit buy and stop buy is whether or not the price is below or above your buy entry. So we like to be using the buy stops so that we get in with momentum. Usually when price crosses a threshold, we get a momentum move, and we like that's why we like to use this trading strategy. So sometimes, of course, not always. It doesn't always happen where it's going to get you and break past it. We might stop here. We may have another up movement here and then a down one. So it may happen in the next 15 or 20 minutes. We're not sure. But we're in, we're live. Object of the name of the game is to reduce risk as fast as possible. We don't care how much profit we're going to make on this trade. What we care is how much we're going to lose. That's the only thing that is thinking process from a risk management point of view, is how do we get this $171 off the table as fast as possible. Okay, market hasn't given us any profit yet, so there's no indication at this point to reduce risk. So we wait and we watch. We're waiting for this price to break down and give us some profit. Break down here, give some profit, and we want to make that trade into a riskless trade, where we remove $171 off the table, move our stop loss to break even, and let the market do its thing. That would be the ideal situation. So we're in a live trade. I like to keep the video going while we're in this trade so we can see exactly what's going on here. We're positive 28. If we can get a few more points, we'll move our stop loss up. Okay, we're in the green. It looks like it's going. There's another 5-minute bar. That one ended at its 5-minute bar. That was another action bar. There's an action bar there. Action bar here. So I'm gonna move my stop loss halfway there. That wasn't the right stop loss. Where's my stop? This stop. So that's the idea here. We can get a little confused as to which stop we're referring to. And I didn't change anything yet. I didn't reduce my risk, and it's already going up. So we'll stop. This buy stop here has way too much risk on the table here because I used the wrong one. So I want to make that 21. No, I don't. What I want to do is move this the stop order in. The stop order 2662. Yeah, okay. Now I can move this stop down, reduce risk to the high of that bar. So on this trade, what we have right now, we only have 113 at risk. It's hard predicting what the market's going to do. We don't know what the market's going to do. We don't want to predict what the market's going to do. So what we do is we say, we listen to the market. If we have a loss of 113, which is the worst case scenario here, that's okay. It's only going to be literally 1% of our account that we just lost, which is acceptable. That's less than 2%, right? So we did good. If we lose 1%, it's a win. It's a psychological win for us because we won by reducing risk, right? So you see this fractal formed here, which we had our buy stop there. We knew that was going to be a fractal because this one closed below it and this bar closed below that high. So as such, that made that a fractal, which we were betting on if these two did. It did come back down here. This one's given us some resistance, some pause. So I'll go ahead and pause the video. We'll wait and see what the market does. Okay, so the market came up and took our stop loss out. So we lost $115, which was 1%. This is a psychological win. It's a trading win for us, even though it's a monetary loss. It's a trading win because we won by reducing risk. We didn't lose 2%, we lost 1%. So that is a win. So it closed our position. What we want to do is do another sell stop at the low of this, which is low 26.49. So we'll do 26.48, 26.48. And we want to put a stop loss in at the high now of this bar, 26.56. That makes it a Y at 26.56. We want to do only 2% initial. So this sell stop for some reason came in way down here. Well, I'm going to move that right there. Okay, we want to do 2% always, initial risk. So is this 36 is the stop loss for that. Okay, and it looks like it's continuing up, but we have a sell stop down here at this low. If it breaks low again, we're going to get in the market. Again, our idea is to reduce risk, reduce risk, reduce risk. Here we have a buy order at this last fractal. Again, if it makes its way back up here and breaks there, we're prepared to go long. And again, reduce risk, reduce risk, reduce risk. So it's a pretty simple. I mean, using this manner of trading, it becomes a very simple process. The market dictates what we do. We're like fishing. We put a line out here into the water. We put a line out here over here in the water, and we're waiting to see if we get a bite. If we get a bite, then our idea is to reel in the fish, or in this case, reel in the risk, reduce risk. So that's how the idea, the concept behind it. Okay, so we got a line in here at this price. At this point, you can think of price as like, you know, your position along the bank, right? And we're fishing. We're seeing if we can get a fish, right? A profit obviously would be a fish, you know, and a, you know, junk on your hook would be like, you know, you reeled up some trash or something. That would be a loss. You know, you didn't get any good fish. But we got lines in the water out here. We're listening. We're waiting for the market to talk to us. Okay, we're not stressful. We're not anxious. We're not frantically making trades, thinking I think it's going to go up. I think it's going to go down. We are using the low and the high with these fractal indicators to listen. We're using these points to listen to the market. Is the market going to go lower or is it going to go higher? We enter and we reduce risk as fast as possible. It doesn't really matter. We don't take it personally if we get a loss. It was just that, you know, we had a fish on the line and it got away. No big deal. What do we do in that case? We pull the line out of the water, we get a new worm on the hook, and we throw it back out. Right? That's all. That's the idea of what we're doing here. So market is coming back down. Back down. It's now at 10:05 our time, Arizona, so that must be noon Eastern Standard Time. So we'll go ahead and end this video for now, and we'll make another video moving forward. So for today's day, we had some string of profit and losses. Initially, that was 13 hours ago. So our first trade for today was positive 309, positive 497, positive 6, positive 144. And then we had some losses, a negative 22, 162, minus 22, minus 245, plus 8, and minus 115 so far. So on our daily log, I keep our log here. So the last one I had there was 245 at +8 and -115. So if we do a +8 and a -115, let me see what our sum is real quick. 722 for the day. So we're up 722 for the day. It's already lunchtime Eastern. It's only 10 o'clock our time. We're looking probably for the rest of the day to be a rebound positive. We don't know. We'll listen to the market. I'm going to go ahead and end this video for now. I hope you learned something. I hope you had fun. You enjoyed it. If you have questions, comments, concerns, please leave it below and I'll get to them. Happy trading. Good luck. Enjoy your weekend. Thank you.